What's going on, guys? Welcome back to my channel. In this video I want to talk about the difference between 2000 tick chart and 5-minute chart, because today I happen to use 5-minute chart during my trading session, and currently we are looking at 2000 tick chart, and you guys can see the pattern. We start out with the downtrend, we have a break and a new low, so you always want to find, as a price action trader, the short-term trend lines, because after break of a trend line there's going to be a retest of a new extreme, and we started running up higher. And the pattern was very similar on a 5-minute chart. This is the 5-minute chart. You guys can see we're working up lower, we have a break and a new low, and then we're instantly reversed, and there was a lot of people buying the market at this moment. But I want to show you guys that this on a 2000 tick chart, because 2000 tick chart is supposed to be mimicking 5-minute chart, but it gives us a little bit more details, and this is why I like 2000 tick chart better. You guys can see the new low right here. We have first entry short, pullback, working up higher, second entry short. So this is a failed second entry short because market moves in twos, and this is a reversal pattern. So you guys can clearly get a chance to enter on this setup. This is also first break of this trend line. So as a traders, we're waiting for a new high. So we have a chance to enter here on a 2000 tick chart, but on a 5-minute chart, there is no entry. On a 5-minute chart, you're just running up higher because the bars are limited by the time, by the 5-minute time frame, and the failed second entry short happened on right here. As you guys can see, we traded up lower and then instantly reversed up higher. This was the failed second entry short chance to go up higher. But in the end, the price action works on all time frames, because I want to show you guys another setup. Just like here, we have this failed breakout higher above this resistance, and we are working up lower. So we have to find the trend lines, and after a break of a trend line, there's going to be a retest of a new extreme. So we have a break right here. But we have this bullish uptrend working up in the meantime, and first we have to let this bullish uptrend play out. We have a break and a new high, and then chance to go short. So on this time frame, on the 2000 tick chart, there is a clear break and a new high of this bullish correction working up higher. But on a 5-minute chart, you just get a second entry short off the EMA, and you don't have a break and a new high. But price action works on all time frame. This is a second entry short off the EMA, nice bearish bar, high probability setup. We are waiting for a new low of this downtrend. So the price action works on this time frame, and also here we have a new low right here, first entry short, second entry short, two-legged pullback to the trend line, and you're working up higher. So in the end, it all evens out. So price action works on both time frames, on all time frames. But the 2000 tick chart just give us slightly more details. So we have this break and a new low. So as we are traders, we are expecting for prices to reverse, and you guys can see the prices. There's a lot of buyers in the market, and prices are going up higher. So I drew the short-term trend line. We have a break, so I'm expecting for prices to make a new high. I didn't mark this setup because we are a bit away from EMA, and it's just the first entry. So we have a break, new high, pullback, second leg to new high. So from this point on, I'm, as a trader, expecting some sort of correction or possibly reversal. But there's a strong resistance starting to form here. We have one more push higher, so the resistance definitely got confirmed here. This is the new high, first entry long, pullback, second entry long, failure. And you guys know that failed second entry long, this is a high probability setup because we're waiting for reversal pattern, as you guys can see. This setup is a little bit more aggressive because we close above the EMA. Nevertheless, it's according to our rules, so I marked it. But what I liked better, to be honest, I skipped this trade because I ended on this trade because I liked better when we trap a few more bulls and then instantly reverse lower. Once again, bearish reversal bar, we close below EMA. This is a much better setup. This is just a confirmation of this failed second entry long, and you guys can see it worked for a scalp. And in this instance, market gave me a huge information, because if this resistance is strong, if this is a good trap, we're going to keep selling off lower and lower. But we instantly got rejected here and reversed up higher, and EMA was holding prices from this point on. So this was the key information today that told me that the bears were really done, because this was all they had for this moment, because this was a very steep move up. And we have a new high right here, first entry long, second entry long, nice bullish bar, EMA is holding prices. But my main reason for taking this trade today was use of the 5-minute time frame, because I just happened to watch 5-minute time frame today, and I don't normally watch a lot of time frame every single day, but occasionally I take a peek. And on this time frame, you guys can see the big leg up, first entry long, second entry long, first entry short, second entry short failure, it is off the EMA, and you know after such a gigantic move up, it is off the trend line, excuse me, after such a big leg up, you're going to probably get second leg. So I just used this 5-minute chart today to help me to enter 2000 tick chart. But nevertheless, for beginners, I wouldn't recommend going long here. I'm just showing you guys an instance where your gut feeling may dictate what you're about to do, because my gut feeling was really telling me I should go long here because of what happened right here, and plus what I saw on 5-minute chart. Even though we're close to this resistance, so yes, I know normally you don't want to take this, but when you get a little bit more experience, you guys can see that with this move being so big and the sellers being so weak and the EMA holding prices so nicely, you may take a chance going long here. So this is only for my experienced traders, and this is second entry long market moves into, so you guys can see that the two-legged pullback are happening on all, in the entire chart here during the day, and prices broke up higher, and no surprise, most breakouts will fail. And I made a video why most breakouts will fail, even though I'm going to probably redo it because I used the microphone that wasn't really great, so I got a better microphone now, so I'm probably gonna redo the video. But we have a new high right here. We have a first entry long pullback, second entry long, and there's going to be a ton of traders. They're going to be buying this market at the very high of the move this late. They were scared to enter early on, they were scared to pick the bottoms, the correction, so they watched everything go here, and they decided to buy very top of the entire move, and this is a failed break higher, and most breakouts will fail. So once again, high probability setup, first entry long, second entry long, failure. But this bar is gigantic, you don't want to enter on this bar. Our risk to reward ratio wouldn't be reasonable here. But here we got the doji bar, we trapped few more traders, few ticks up higher, and instantly reversed down. We closed below EMA, bearish reversal bar. This is the inside bar of this failed second entry long. So once again, another example why I like inside bars. I know this is technically, this bar is not inside bar to this doji, but it is still inside. This bar is still engulfing this inside bar. So this is why I like taking this. And this is very similar pattern to this one. You have a second entry long failed, but you get this lower high here. Second entry long failed, you get this lower high here. So if you just wait for the high probability setups, you will do much better. But we are working up lower, and after such a failed breakout, you probably know that you're gonna have make a new low of this downtrend. So this is the first break of this downtrend, and there's a trend line rules that after a break of a trend line, there's going to be a retest of a new extreme, most likely. And we have a second entry short right here, but we're far away from EMA here. I would like taking this trade, even though we're inside of this trend line, if we at least touch the EMA. That would be two-legged pullback to the EMA, but we're not close to EMA here. So you definitely have to respect this bullish correction. So let this bullish correction play out first before you start looking for shorts. Break new high. From this point on, we can be looking for shorts. And I had my loser here today, because for whatever reason, luckily this was a small signal bar, so I almost didn't lose any money here because this was a very tiny bar. I used the limit order as well, but for some reason we just made a little push higher, and then it went exactly where I thought it was gonna go. But there's really nothing you can do about this. The price action will work 90% of the time, and this is just the minor setback that will happen occasionally. So you just have to let this go. You cannot let this phase you, and you just have to watch it go without you, unfortunately. First entry short, second entry short. I like this second entry short, even though we have a new low, because a lot of time you get two legs to a new low. But this is a two-legged pullback and such a nice big bearish reversal bar off the EMA. I think it's worth taking a chance here that we're going to make a second leg on such a nice setup. Once again, two-legged pullback. Market loves to move in twos. And you guys can see we have a break, new low, and prices instantly reverse. Perfect price action. Just find these trend lines, wait for the new lows, wait for the second entries. And once again, we have a new low right here. Prices are working up higher. And once again, the same thing over and over again. We're looking for two-legged pullbacks at the key entry points. High probability setups. We have a new high right here. First entry long, second entry long, quadruple bottom right here. So the support is holding strong. Unfortunately, the bar is bearish. And the next bar, the half of a bar, the stem is bearish too. So the horrible signal bars, when we are going long, we are looking for nice bullish bars, and we didn't get this here. But you know, next time you see this, they're going to be better signal bars. So I'm just going to mark it as a price action example for you to study this, because this downtrend played out with the break, 2 legs to new low. We're walking up higher, reversing up higher, and you know, second entry long, this would be good trade to take. But unfortunately on this setup, it wasn't, on this chart, it wasn't a good signal bar. And this is the 5-minute chart. You guys can see price action very similar, and I just happened to use this 5-minute chart to prompt me to go long here. But in the end, price action works on all time frames. Just, you know, in the end it will all evens out, because on 5-minute chart, this may be first entry long right here, pullback, and second entry long right here. We're starting on a higher time frame, meaning this on 5-minute chart there are multiple trends, you know, up and down. But if you go, let's say, to a 30-minute time frame, this would be the first entry pullback, second entry long. So it will all evens out the higher you go, because it is all connected. So just something to keep in mind. So I'm gonna wrap up the video, and I'm just gonna see you guys in the next one. Bye guys.